Hey guys, DJ from PTA. Want to go over my loss on Cnce May 23rd. Took a little paper cut on that one. I say little because of the account size and the amount of shares that I lost on it is relatively small to what I normally load up. I kind of scale back whenever I'm not 100% sure on a particular trade. When I'm trying something or I just want to tap my foot in there, that keeps my losses minimized. I usually scale into my trades. So when people ask, well, how is it that you keep your P&L in check? It's really because of the trading style that I select. I really scale into trades. So when I have big, massive days, and when I mean massive, 10, 20,000, 80, $30,000 days, it's because I've been trading that stock all day and I've loaded in, take some off, loaded more in, take some off. That's just not one whole position. There's multiple positions in that stock. And I think that that's where, starting off is something that I don't see a lot of traders do, is learning how to scale. It's not just based off your account. It's not just based off the fact that, you have 60,000 in your account, so you can scale, you can risk $600 or whatever your parameters are. It's okay, I can risk $600 max. Now, how do I get my risk to be 120 and still make 1,300 or still make 2,200 or $5,000, whatever it may be? A lot of that plays into, range of the stock movement, and also adding and taking off in the proper places based on the chart. So that's what, why some traders trade certain names, is because they understand the behavior of that stock. When it comes down to the spot overall market, we're still in a downtrend. We're still pulling back per se. Is it recession numbers? I wouldn't say that, but it's definitely a pullback. And looking at the monthly, you can kind of see that in this chart. And it's been going down for a while, a few months now. So, you've had 2 solid months almost of just solid red pullback. And yeah, you're going to get your significant pull up and stuff, which this was a good rally from 414 up to 460 over the course of those 3 weeks. But ultimately, we're still in a downtrend. We're still swinging down. We got our swing low here, and then this is your swing high going down further. So we might create a swing low and then, kind of move up. And now, that's in the perfect world, that everything will go out the way that you say it or see it on the chart. Because, I would love just from the low to get back up to the 52-week high. That's $100. You get what I'm saying? That's a really nice move. But realistically, it's probably a come back up to here, which is a key area, and then fall down. Or if it do, it'll probably get up to here, perk up, come back, retest this area, and maybe come back up to that line. So, and that would be your weekly high. So the biggest thing is making sure you understand the overall senses of the market. This is the reason why I get in and out. Might have a 5-10 cent risk at 60 cents, 70 cents, I'm gone. I'm not trying to go for those $2-3 moves anymore, just because the market just doesn't sustain it. Every time I get into a trade, someone's looking to try to get this trade to go lower. So you have to keep that in mind. First stock, we can go over Cnce. Let's see something here. So again, on the week of the 23rd, let's go to the, see that's just been on a pullback, and this was a massive pullback on this day. I was assuming it was going to take off simply because of the price action in pre-market, but it just didn't hold, just couldn't hold. So we'll go down here to the hour, and that's on this day. I actually got in at a 5-on-1 average. So let me draw that out for you. So in hindsight, that was a very risky trade. I personally was trying to play it off of price action, thinking I was going to get a nice little push, but it kind of just faded. And what I mean by that is we got in about right here and then it faded. So let's go down to the 1 minute so you can kind of see. So when we got in it, it was right here. Push and then a collapse. When it held, knowing that my stop loss was set at 460, 465, I wasn't looking at, a massive move. I was looking at, anywhere from 60, 70 cent move. So 2 to 1. Part of the reason I was looking at it that way is just because it just didn't have a lot of range. And this is where, playing these low floats, low price stocks, what it does to you is it's a great recipe to chop up your account, because they'll swing it low. I mean, this one in particular had 36 million float. So, ideally you got someone there swinging it down, swinging it lower, knocking out the weak longs and then ripping it higher. That's just, arithmetic trading. Them high frequency traders being involved in that particular play. So the key to it all is to try to make sure that you are playing the stock in such a way that meets the criteria of your trade. For me, I was looking at the 30 minute, I'm seeing the higher lows. I'm looking at, the 15 minute. Getting those higher lows. So it's one of those things where you gotta be paying attention to the price action, and sometimes you just miss it. The ideal trade looking back would have been at a much lower price. So instead of it being 501, I probably would have let's see something here. I probably would have got in somewhere down here. Yep, right here, somewhere right here in this red to green play. Somewhere down here in the 470s or whatever. Ideally, let me see what it looks like. Yeah, I probably would have got in somewhere here, 480s. 480s would have been a better put. Could have got in at 5, maybe broke even because it got up to 5 or whatever, but that's neither here or there. That's just how that trade played out. The next trade I want to go over is Govx. This thing's been kind of running for the last couple of days. I'm gonna do a video lesson on my actual trade for the 24th, which was a winner. But as a market recap, I want to kind of put your eye on something so you can understand when the stock is rising and then we get a pullback and then you get a nice little move up like this. The biggest thing is to kind of look at, okay, what's really going on the smaller time frames. Where's the struggle? Once you know where the struggle is and the higher lows, then you can just predict or look at the price action based on pattern to kind of get an idea of where that stock is going to go. Okay, I know this stock can go higher. I wanted to go higher, but how do I know? Where in this particular trade here, it's just really just paying attention to the price action. Being patient enough to let it form. Some traders got in kind of first thing in the morning with this thing, and not my cup of tea. I don't like playing nothing here. I like to see it pull back, which it did. And the ideal trade on this one would have been probably right here. Try to get in off this low, off this high right here, 195, 196. Let it rip back up, swing low, and then it finally ripped. The problem with that is, like I said, being patient, because some people let it rip and then it fell against them and they got out. So the key to it all is understanding those key areas in those trades. So again, when I got that rejection here, that just built the supply zone for me. So that's just telling me, okay, yeah, this is where they're coming back to make a play. and this is the area they come back, collect, come back, collect, and then they went higher. Solid trade, little choppy, not my cup of tea as far as trades, but right now the way things are, it's all about you protecting the bank. So there go your pattern there. When you see that, that's when you jump in, and then it created another one here. And you got another pop. So there's always a lot of patterns within the chart. Just have to train your eyes to identify what those patterns are so you can take advantage. Next trade I want to go over is Cbio. So let's go back to the daily so you guys can kind of see it from that point of view first. And this is that top-down analysis I talk about in all my videos. This day went pretty well. Let's break this down to an hour. This is a nice move up, a little janky, but it was still a nice move. You just had to be patient and wait for it. Ideal entry probably would have been about 95 off the day low, and then let it rip. Loaded up pretty heavy. You know, you would have put up, 95 cent to risk. 95 cent, it might have been $1,000 move that you was willing to risk. From here, it pulled up. That's 25 cent. Pulled back to 9 cents. It kind of held this area, jerked, and then this is the first time you probably could have had 17 cents higher. Let it reach out, pull back, snub. So now you got to remember that this key area is gone. This key area now is now this key area, and then that's when you take the trade and let it rip. Nice move. Again, the ATR on this was probably, I don't know, the ATR yesterday was probably about 7 or 8 cents. I mean, today is 14. So it's just something to think about, something to look at when it comes to your trades. What is the stock really doing? What is the stock telling me it wants to do? And then accommodating that. So, hey guys, so if you like this video, go ahead and like it. Hit the subscribe button so you don't miss any of the videos. Hit the bell. And that helps out with the algorithm and alerts. Also, if you have any questions, concerns, leave it in the comments. Be sure to go reach back out and let you know something. And guys, like I tell everyone in the Discord and everyone I meet that trades, stay studying and stay focused.